In this video, traders, we're going to look at these don't count as support and resistance levels. Stay tuned. Hey guys, warm welcome to you. Alright, so I see many traders, what I believe are making a pretty critical mistake with this. And again, it's my opinion on it. I would be interested to hear your opinion in the comment section below. But I see a lot of traders making this mistake when drawing support and resistance lines on their forex charts, on their commodity charts, stock charts, whatever it may be. And the problem is this. So people will come along and they'll go, okay, so we have support here, we've got support here, we've got support here, we've got support here. Aha, we've got resistance here, resistance here, resistance, 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 resistance. See what I'm doing there? All I'm doing is drawing lines at swing lows and swing highs. Okay, a lot of people will do that and they'll say that's the support and that's resistance. Whereas we look at this chart, someone might come along and go, okay, there's some support there, there's some resistance there, there's some resistance there, there's some support there, right? You see the subtle difference, guys? Well, it's not so subtle, is it? It's pretty obvious. You know, many people, I believe, are making a mistake that a swing high or swing low is a support or resistance. Now, don't get me wrong, in some instances it's worth paying attention to. I'm not saying don't pay attention to it. Definitely should do, because it's a time and place where people have switched the supply and demand. The supply and demand imbalance has switched. It's a turning point in the market. Yes, it makes sense to watch it, but categorizing it differently from this is a lot different, guys, to this. If you start trading big money, or not even big money, if you start trading your capital around this, you're going to get slaughtered, because there's so many swing highs and lows, you can't deal with them all. You think about a market that's kind of chugging up and chugging up. You've got 15, 20 swing lows, 15, 20 swing highs. Well, which one counts? Well, yes, you need to take them into account with what you're doing and understand that that was where price changed direction. However, it doesn't mean they are support and resistance level. This is better, guys. This is an obvious support level because we had multiple touches of it. It becomes support because we've had multiple swing lows at it. There's obviously a buyer there who's willing to buy it, or a seller who's not willing to sell lower. Whatever the reason, it's turned the market. Same with this here. This is a proper level of resistance because we have multiple highs at it. When it finally did break through, it bounced down and touched that level. It's a proper significant level of support now after it's been resistance. The old resistance turned into support and vice versa kind of thing. You know, this is nothing. This little level here is a nothing. And yes, you could argue perhaps that it became support here, but it's one swing high. It's one level that it touched. And, you know, so if you're buying a breakout of that, then okay, yeah, but you know, think about it in terms of a trend as opposed to, oh, it's breaking out resistance, it's breaking to a new high. That's very, very different to it's breaking out of resistance. Two distinct different types of characteristics of play, guys. A new high is just a new high. Breaking out of resistance means that it's overcome a force, you know, a force of resistance of sellers or whatever sitting right there, whether that is buyers shutting off or selling. That force has now been overcome, which is suggesting the market has changed condition as opposed to it just chugging up to new highs, which is still in the same condition, an uptrend condition. Two distinct different things to look at, guys. Same with the support. You know, you can say this is why people like to buy at the support, and why I think people get caught out doing it on this. You know, they do this scenario, right? They buy and they look to buy when it comes back down to here. But really, it was one little high. It was an irrelevant thing. It was probably a single print. Just buyers then backed off. A completely different scenario to this, when it was multiple, bang, 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 couldn't get through, finally got through, came back. Now it becomes much more of a valuable trade area than this, when it wasn't really a decent level in the first place. So what I'm getting at here, guys, is when you're drawing your price levels on, just be sure you're not drawing lines of support or resistance on just at swing lows and swing highs. I'm definitely not saying ignore them, because they're super useful. It's a fresh area. It's an area where market turned, but it's not the same as a support level. It's not the same as a resistance level. And we probably all fall into the trap of using the terminology of saying the support and resistance and whatever, but we have to remember that it's different thing. There's a different strategy to be used for it. It's a different condition, and something different has happened and changed in the market to break through a support and resistance level compared to just breaking through an X day high or an X hour high or an X month high or an X month low. It's a different kind of thing, which is why, you know, we get these fake outs very often, you know, pushing through, pulling back, because it's not some key level where, you know, someone's sitting there and aggressively selling to stop that. You know, it becomes much more likely that we fake through because there's not really any physical thing stopping it. It's more a case of, oh, that was just the swing high or the swing low. And so, yes, bear them in mind, mark them on if you feel the need to, and jot them down in your journal and whatever you do. But these are far more important from a perspective of marking them as a swing, as a support and resistance. So differentiating between the two, I think, is key, guys. Anyway, let me know your thoughts in that comment section below. Whatever you're doing, keep your risk managed. I'll see you in the next one. Bye-bye.